Hello, everybody, and welcome to the Open eCry market commentary for the week of July 23rd. My name is Toby Gennaro from Trade with Precision, and just coming to you with the outlook for the week on some of the U.S. indices, the commodities, and foreign currencies. So looking at the ES futures on the S&P 500, looking at some of the higher time frames here, we've been looking at the monthly chart for a while. Last month, we got our clue with this bullish candle in and amongst that buy zone there, the 10 20 period moving average. We're right in the middle of this candle, still have another about a week to close out the month here. For right now, it's looking fairly indecisive, but we do have a breakup through the high of that candle, which is bullish. Looking at the weekly chart, we can see with some of these individual candles, we have some nice rejection candles spread out around in through this consolidation right here, but we do have some higher highs and higher lows. As you can see here on the daily trend, a little more clear, we have higher high, higher low, higher high, higher low. We just snuck in a couple days ago last week that higher high. So unless we're going to get a breakdown through some of these lows here, like this one right around 1320, and then especially a breakdown through 1302, that would give us a signal of the first lower low. And then we'd probably want to start looking then for the first lower high, and then we would be in a formal downtrend in terms of the price action. So we don't have that yet, so we're still looking to remain slightly bullish. This looks to be just another pullback right here, as steep as it may look. Another pullback similar to this one, and another pullback similar to this one. So we're really kind of on the third pullback. And we'll have to see what happens here. Looking at the 480 chart, we won't know till the end of today, till we get this closeout candle. But if we can get a closeout of a very bullish candle there, we got some extension away from the moving averages, we can at least expect a snapback right into this, right back into that zone, and then see if the market will catch fire and then potentially move higher. What I would probably anticipate is we have two touches here, which has defined a true resistance level. If we can maintain this position right here, then move back up and retest that level, that'll be the third touch. And then we can start to look for a potential consolidation around that, and then start to look for that a break of that flat level, which would be obviously very bullish and very positive. So that's kind of what we're thinking right now. We'll just have to see. Obviously, the markets are still very news-driven. Any news can come out of Europe at any point in time and still push this market down further. So watch some of these levels here on the daily chart, right around that 1320 level, and then down around this 1301 level. That has been a solid point of support. And start to look for a potential change in trend if we don't start to get a reversal here and start moving up in the next day or two. And a little different scenario here on the small caps, looking at the Russell 2000 than what we were seeing on the ES futures. Just taking it from the top down on the monthly chart here, we still have that same bullish candle that we had on some of the other indices, and then we got a break of the high of that candle, and so we still have another week here. It's looking pretty bearish, but in a week things could obviously change in that regard on the monthly charts. We'll have to wait and see. On the weekly charts, we can see that we have some nice rejection candles in and around here throughout this, this consolidation right here. And things are looking like they want to push higher. We're coming with this most recent a couple of weeks ago. We're coming right back in line with another lower high. And if the markets are rolling over, we'll have to see if the market breaks through some of these other lows, which we can see a little bit better on the daily chart, which means we just put in a lower high right here, and then we actually just put in a lower low beneath the low of this 775 level. So the 780 level has been the level of the best support and resistance. So I'd really be looking for the 780 level to hold, even though we're just a tad below that, and be looking for probably a bounce off of there. So wouldn't be jumping in on a short move here. We have some extension away from the moving averages on a number of the higher time frames. So I would be probably initially expecting some kind of a snapback, at least into the moving averages, and then start to see what happens from there. So the small caps can move in a different direction than some of the large cap stocks in terms of an index. Folks, investors can be moving money out of the smaller companies into some of the larger companies for reasons like safety and those kinds of things. So keep that in mind. Right here is not the place where you want to be getting short, even if the market does drop further. This would be more than likely a good place for a bounce right here. So keep some of those things in mind. Keep an eye out for some of these solid levels when we're in a rather choppy market, where price action is really moving on both sides of the moving averages and kind of chopping around. It's easy to get stopped out a lot. So you want to be looking at some of these extremes up against solid levels of support or resistance if you're trading the market with the trend or counter trend. And just taking a look at one foreign currency here on the euro yen, really have a nice downtrend here on some of the higher time frames, really all the way down to even some of the intermediate and the lower time frames. But just looking at some of the higher time frame charts here on the monthly, you can see just some really nice pullbacks for quite an extended period of time. I mean, going all the way back to the lows that we had there at 2009 in terms of the financial crisis and whatnot. And just some really nice moves down lower and some nice pullbacks into those moving averages on the monthly chart, which take obviously quite a bit of time for these to set up. And then you can see those the same thing happening here on the weekly chart. And then going down to some of the daily chart where we can find some of our setups here and even some of the lower time frames. Just looking at some things here on the 480, just some really nice setups in and around those sell zones and looking to take this market lower. Really don't have any divergence showing up on any of the other time frames. You'll find some divergence showing up on the really low time frames like the intraday charts, the 5 and the 2 minute. So really just looking for a bounce back up into that sell zone, and then probably looking right here at this 96.4 level would be a nice point of resistance. That was previously support, and then put us right back in the sell zone. Start looking for that setup candle if the market can get back up into that 96.4 level. So these are some of the optimum trends. Some of the stuff we're looking at on the U.S. indices. You'll see that price action moving on both sides of the moving averages is telling you that it's a very scrappy type of trend, very choppy market. But whenever you see price action responding to these sell zones, those are really the better, more predictable trends that you want to be involved in. So just keep an eye out for any trend changes here, looking for some divergence on like the 60, the 120, the 240-minute charts. When you start to see a lot of divergence setting up there, you can probably expect a pretty good bounce at that level, and then start to look to see if there's going to be another short setup for you. But some good trends there on the euro yen. And just looking at another foreign currency pair on the Aussie dollar here, I've got some of the higher and intermediate time frames up here. But looking at the monthly chart, Aussie dollar's obviously been in a strong uptrend. We've actually put in just a lower high right here several months ago. We haven't put in a lower low to confirm this as a change of trend yet, but we're actually getting instead a bullish candle from last month and a break of that high to actually look like the market may be pushing higher. So just have to be careful here on whether we're going to get a lower high below this level of 108 and that the market's going to go down and then start to break this level of 93. But for right now, going down to some of the smaller time frames, starting out with the daily chart, we've got actually a nice pattern here developing of higher highs, higher lows. We've got 3 of the moving averages in alignment, moving up to the upside, and some just very nice pullbacks into the buy zone that continue to push higher. So we're right back into the buy zone again. Don't have a bullish candle yet to get long on the daily chart, but as we move down to the 480 chart, we can start to see some other things developing here. We have a nice level here at 102.5 that's been around for quite a while. We got a number of touches in through there and some congestion, so we're pulling right back down into that level. And if we put in a Fibonacci retracement, right here we can see that from that most recent move all the way back up, we're actually right back into the buy zone on that 62% level, coupled with that 125 level, which would make a very reasonable long position to start getting long this trend again. If we can couple that again with a nice small bullish candle here in the buy zone in the daily chart, that would be ideal. We'd have a number of things working for us there. But take a look at the Aussie dollar and look at that trend there on the daily chart. There's really no divergence setting up yet on any of the time frames, so that would be your clue that the market may be, the trend may be getting a little tired, is when you start seeing some of that divergence on the 240 to 480, those kind of charts. So take a look at the Aussie dollar, see what you think about that one, and look for that setup there with the Fibonacci retracement right at around 62%, and that support level, and see what you think about that. And so that's the wrap up for the market commentary this week, the 23rd. I'd like to thank you all for watching the Open Economic market commentary, and we do look forward to speaking to you again next week.